All right, it's gonna be a late night video here. Now we took 2 trades. First one didn't work out, and I'm gonna go over that right now. And then eventually took another one, and then we took a little W. So this is the first trade, the second trade. So I'm gonna go over why the first one didn't work out and what I could have done to prevent it from happening. And this is the proof, you know what I'm saying? Like, no joke, guys, no joke. The proof right here. You can see the first trade, right here, first trade. Then this is like a little quick scalp. I got in and out just to pass the account, you know what I'm saying, just to pass the account. So I knew when I exited here on this one, I originally was at the profit target, but the commission, not even the commission, it was just the spread ate me up. I'm not even gonna lie. I was like, spread on GJ is really bad. Around, what was the lot size? I can't even see it. Lots 3.5 on GJ. You're gonna see how much the spread is, bro. I'm telling you, that shit is cooked. $36 of spread. That shit is cooked, bro. It's like 400. That shit, cut my shit in half. Not cut like 1/3 of the, that's like almost 1%. That's like 0.25 past 0.20. That's like 0.35 right there. They're taking away from me. You know what I'm saying? Like, whoa. But the thing about Forex too is I like how you can be able to risk so much more, bro. You're able to risk so much more. Oh my goodness. You're able to risk like 4% and catch like a 1 to 2, bro. This was the trade, like a 1 to 1.6. My risk was all the way down here. You see the market just instantly came back down. You know what I'm saying? I was controlling myself, controlling my emotions, like I was like, like chill. We just got in the trade. The first trade we lost. I'm gonna go over why. So again, proof of this is the one that we failed. Again, we were risking a little bit too much, and I originally had to stop at basically 4%, but I just kept trailing it because I just knew we were gonna hit out either way. I had it at 4%. I was gonna get hit out with like another percentage of with spread, so it really just didn't matter at that point whenever I was coming back down. So it's 3 lots, and we're at 4% of a stop loss. Right here you can see basically it was around 33, so close to a percentage we were going to get out, plus the commission. Boom, we're going to hit out, and we don't even know if it's going to like hit 4%. It was going to hit more. So yeah, now it's pretty much really at the loss here, and I'm going to go over the trade. So if I just simply cleared the drawings, I'm going to show you guys. I already know where I entered. So we entered here at this inversion fair value gap, and this is like on a different account. I bought 2 more accounts. Well, I bought 2 accounts here. We passed one, we failed one. I was willing to give it a stab here, especially during Asia session. I know a lot of people were like, whoa, what are you doing? You're not sticking to your mechanical strategy. You're not doing this, you're not doing that. And I just felt super confident in my ability to read price. That's all it was. It was ego telling me, like, buy an account here, like the other account I have, like leaving it. Of course, probably lowering the risk. We're just using that one in the next couple days because we can't even go on the other one. Phase 2 right now. We have to wait 3 days. My ego, it wasn't even me telling myself, it was my ego. You know what I'm saying? Like, I just got home, was on my phone. I was like, bro, I keep doubting myself. I keep wasting my time, not taking the risk of taking a good amount of risk. Like, I'm doubting my ability. I've been doing this for so long. Just take the fucking risk. That's what I did. So this was the first trade. The first trade really wasn't the best in my opinion. And the thing I'm going to distinguish why this wasn't really good is because of the change in the state of delivery. From just being real, change in the state of delivery. When you're reading price, you need a change in the state no matter what. The bigger the time frame though, the better. Even though we had an inversion, I entered off of the inverse. You can see we instantly went and got stopped out. Boom, we got stopped out. Hit minus 5%, 6% around there, blah blah blah. And I trailed my stop loss right here to this order block low, and I brought it back up. I was like, yeah, it's just no point. Bring it up here, put it right here, close to around there, close to the order block high right there. You can see it just came, wicked us out right around here. So pretty much pointless. And then I was like, cool, let me, I think the market is moving higher because of the higher time frame. So let's work our way up to the higher time from here. Let's work up from the monthly. So the monthly, we're bullish. Even though we're inside of this SIBI here, we're still bullish. Weekly time frame, we have a weekly SIBI. We're drawing to the 50% there, and yeah, we're just drawing. And I drew the consequent crush from this wick right here, seeing if we're going to use that as a means to push us lower. And then on the daily time frame, though, we created this change in state right here with this down close candle here that stabbed all the way, that has majority of the volume there with the body. We waited for a change in state of delivery there. Boom, we got it. And then we closed above, and now we came back down. Now, to me, power 3, we don't need to come back down further. We can leave this unfilled and create a fair value gap to then eventually tomorrow retrace and then eventually start to move up higher. Or next week, this Friday candle right here can be just, a doji. We can come back down, fill that up, move up higher there. But on the 4 hour, we had a 4 hour buy side imbalance. What is your drawn liquidity? This is your drawn liquidity right here. And then this high. So that's another short-term high up there. And then on the 1 hour time frame, on the 1 hour, again, we have a 1 hour buy side imbalance. We're retracing. I was watching SMT. You can see SMT was forming there. On the 15, we also had SMT here with this candle right here. You can see how UJ never really, let me mark it out for you guys. So UJ never swept that low, while basically GJ did. So instantly right then and there, I knew something was up. And I instantly clicked to me. I was like, all right, this SMT. And this is something I need to distinguish whenever I'm being a discretionary trader. So like add more rules, or like not really add more rules, but like just understand when price is going to reverse. Because This, I really caught a retracement reversal, you know, like it retraced and then we reversed. I'm not really trying to catch the expansion. I'm trying to catch the reversal here to get majority of the piece of the pie. But like you have to have certain criteria to able to distinguish when that reversal is going to happen, or else you're going to get tricked out like the inversion for value gap. It did look good. I'm not going to lie. That's why I took it. But then I realized, you know, like I was trying to be logical. I was like, okay, count one down. We can lose the second one. I'm cool with that. But, you know, like what did we do wrong? We could have added more rules. We could have waited, been more patient, and we could have waited for that change in the state of delivery. And that was another thing I saw. So again, on the 1 hour, we're retracing into this 1 hour buy side imbalance, hitting the OTE zone right here, and we're just like hitting a discount. So it did look ideal. Okay, on the 30-minute, we had a 30-minute buy side imbalance being respected here. You can see that there. And then we had this order block. So with the order block I respected, we retraced up into it, we hit it, and then we did have an inversion here I was looking at, but it just really didn't matter. So we had an order block, we retraced, and then we started to move up higher. I was trying to catch this right here, you know, this right here, this little retracement to push up higher. But again, you have to go to the lower time frame and distinguish it, and like really just like dig deep to like the lower time frame to know when the reversal is going to happen. That's why price is fractal. I'm telling you, if you're able to read a price for what it is logically and ask, you're able to read price logically, and you're able to ask why is price doing what it's doing? Why is it at here? Why should it reverse there? Why? Ask why is price here? Why is price respecting this array? Why is price not moving away from this? Why is price stalling? Why are we here? Why are we not, you know, moving away from the discount? Why is price retracing into this 15-minute PD array? Why did we not reverse here? Why did we not respect the inversion? You know, like trying to ask why as much as possible is very important whenever you're trading, because then eventually you're able to put the pieces of the puzzle together from every time frame. Again, the higher time frame is more important. I think I should have been a little bit more wary of that and been on the higher time frame there. But again, here, this is where we entered. Again, the SMT there, that's kind of another main confluence. We had this order block being respected. We were retracing into the discount of the range there. So it looked very ideal. If we go to the 5-minute, this is kind of another thing. On the 5-minute, we had, so right here is where our retracement was on the 5-minute. We're looking for a 5-minute change in the state of delivery. But then I realized we don't really need a 5-minute change in the state, because we have this premium wick consequent encroachment. I mean, the discount of the wick right here, because this is the discount. To me, anything I count as discount is, anything I count as discount is below, you know, like the body below. You know, it opened up here, closed right there, but anything below is discount. So like right here, this would be discount. Premium is anything above here is premium. This is all premium. This is discount right here. So again, I look at the bodies. I look, you know, is the wick above, that's premium. If the wick's below, that's discount of the wick. So once we, you know, we got closed above here, then we closed above again, and then we, you know, we formed this doji candle, we came back down, then we came back down further, and then we moved up higher. That's instantly when I knew, because like we don't need a change in state of delivery, because we're disrespecting this PD array. We're holding the buy side imbalance. We're holding the 15-minute PD array. We also have a 30-minute CRT here, and we are retracing to 50%. Now we should start to move up higher. Everything was clicking for me. Really, the only thing I did wrong here was have the lower time from inversion fair value gap there. So again, the 1-minute inversion fair value gap here was not the best scenario. What you want to do is wait for a change in the state of delivery. I think inversions are good to give you a good change in state of delivery, but the order block confirmation is always the best, and waiting for each up close candle to get disrespected. Because again, here we had this order block here holding to push us lower here. Even after the inversion formed, and that's where I entered. You can see pushes lower, swept the low. I thought a breaker was going to form here, but it never happened. And then we formed another inversion, and you can see it didn't hold. It came back up, retraced back up into this order block now, and you can see respect to the 50%, and then eventually we start to move back down lower. And again, the inversions for value gaps are good, but you need to add the confluences up together. Order blocks are very powerful too. You know, like you can't not distinguish order blocks. And you can probably use standard deviations up here maybe, but again, order blocks are very powerful. You want to not forget order blocks are in the order flow objective. Same thing with the wicks, the consequent encroachment of the wicks, the order block mean thresholds. You want to add every single thing to the piece of the puzzle. But again, my higher time frame was biased. My higher time frame bias was bullish because of the 30-minute CRT, the 4-hour buy side imbalance, the 1-hour buy side imbalance, the discount of the range being tapped up into OTE basically. And then once we formed this inversion, I didn't enter because I already knew from right here, failed. This one failed. What is this one likely to do? It might fail unless we have a change in the state right here. Unless we have a change in the state of delivery, we make this inverse right here. We make this inverse. That to me confirms we're going to be bullish. And what does it also form? It forms a bullish breaker. To me, that's when market structure is changing. From Romeo's course is what I learned, but also ICT, you know, is pretty basic. Whenever we form a change in the state of delivery, that's kind of where, you know, like the market is going to start to reverse. And this is kind of where we saw the market reverse. We waited for a closure right around here. And then I think, where is it at? After this candle close, we entered. We had our stop loss at the low down here, the rejection block low. Why do we have a rejection block low? Because if price is going to, balance this right here, this balanced price range, we don't want to see, the market come back down and close below the 50%. You want to see the market push up higher, because this is all balanced. You can see from this low right here to this high, we have traded both sides. We went down, then we came back up. Now we don't need to go back down any further, and we need to simply respect the 50% and push up higher. And that's what happened here. Again, we stalled a little bit. We came back down, retraced a little bit deeply. I wasn't really worried. And then we started to move higher. And again, I took profit around here somewhere because, again, I was already hit. Not gonna lie, my profit target was up here because I was aiming for a little bit more because of the commission and the spread. But then I simply took the trade there and I exited there. So we're able to see here. So everything is adding up. You can see inversion order block. We had the change instead of delivery. Waited for that. Standard deviation targets telling me up here. I was aiming for this high. Right up here, but then I closed the trade right around here somewhere. But again, we wigged down 50%, and then again, this is the consequent encroachment of that wick right there, and we were in the OTE range. We traded into the OTE range, and then we moved up higher. Again, I'm not going to simply trade OTE. What happens if order flow disrespects that OTE and we continue to the downside? Like you can't trust simply one confluence. And again, we're above here, the 50%, closed above, retrace. We didn't move lower. We closed back above, and then again, we opened up, retraced, then we pushed up higher. So again, very key confluences there. This little inversion for up there we traded on the 1 minute, it wasn't a bad trade, but it just wasn't ideal. Now looking at it from like a logical perspective, after we passed the account, and then again, boom, we pushed up higher, and then we started to chop around, then we moved up higher again. I was thinking about entering here, around here, whenever we formed this little 5-minute inversion, but I realized, it's too late, I was over here watching like around here when we already met the high up and like this high up here. I was like, yeah, it's too late. So I just simply went on UJ. And we're looking bearish here. We're looking bearish. SMT, we're not really respecting. We're not really pushing up higher. And you can see we had a 5-minute CIBI. Why did I enter this one? We had a 2-minute inversion for rally after form. Once we formed this inversion around here, we opened up right here, and then we came back down. We picked lower, and that's kind of where I entered my trade. See, the market did respect, and we pushed lower. We hit the rejection block low. That's kind of where I took my profit. Boom, done. And the account is now passed. This one did get blown, but it's a learning experience. Whenever I'm discretionary trading, it's a learning. Everything I do, every time I take a loss, I'm gonna review it. I'm going to simply, go and backtest this trade alone. I'm gonna backtest this trade, really review it on the 1 minute, try to digest everything. If you see my tape reading notes and again, guys, if you're actually watching my videos and you're actually doing this, I promise you, this is not gambling. Look at this. I promise you, I'm actually watching price. I'm actually digesting. Bro, look at the UJ one. I'm actually reviewing these. I'm actually trying to understand, why did I lose? What did I do wrong? What could I have done better? Asking, why did price not move away? What could I have done better? What could I learn from this experience? What do you think I'm going to do with this GJ trade? Learn from this experience. I'm going to learn from these experiences and continue to grow using my trading knowledge that I have from ICT that I've learned. I feel like I've been suppressing myself, trying to trade patterns, unlogically, unrational, trying to make money off of patterns. Boom, boom, boom. Every time I shoot my shot, I miss, I lose, I get discouraged, and I'm not putting in the work. I was simply lazy, trying to find one strategy from other people, strategy hopping here and there, trying to find a pattern strategy. Let me use this pattern strategy. Boom, boom, boom. Trying to, boom, boom, boom. It didn't work out. Pattern logic doesn't work. Don't trade patterns. I was reviewing the 22 mentorship, the first, couple 10 videos of my notes, and instantly, don't pattern trade these concepts. Try to understand, digest, simply use everything you can use, combine it together, and just work upon that. You don't need to have one entry model. You can have every single entry model. If you know how to read order flow, you can enter at any PD array. You can enter in any single area. I promise you, if you have watched the 22 mentorship, core content, and the 23, and that's all you need. You don't need anything else. I promise you. But again, this was a learning experience. What I plan on doing, buying another one. Buy another one tomorrow. I'm gonna go to the bank, deposit more money, buy another one. Why would I try to stop? I'm not gonna stop. And it's not even ego. It is kind of egotistical, but again, I'm backing it up. Confidence. This is confidence. The main reason why it's confidence is because I've done this for so long. If you really go back to my channel, I've been trading like this for so long, but I just wasn't able to really put it all together. It takes experience, of course, but I wasn't able to put it all together and really digest what he was saying, only until now. After I had a mechanical strategy. I'm tired of it. I don't want to be simply trading once a week, even though trading less is, beneficial. Less is more. If you're able to really read price and you're really able to put in the work and do this and that, of course, losses are inevitable. I just took a loss, it's inevitable. But if you use that as a learning experience to grasp your knowledge upon something else, and that's, it's not a loss. It's a learning lesson. We lost this account. We lost this trade right here. But what did we do? We bounced back. We hit the profit target. We won. It's not a learning. It's not a loss. It's a learning experience. We didn't really lose. Did we lose? We lost an account, but we just passed the phase one. Phase one is usually what my hardest difficult challenge. And that was phase two, actually. What I plan on doing, though, reviewing constantly more, getting better, more, risking less this time. Probably only risking 2%, aiming for 1 to 2. You know, simple as that. And yeah, you know, like, it's not really, maybe I can trade my mechanical strategy, pass it, get funded, use my mechanical only strategy, and just try to, you know, get a good payout from there. I might do that, you know, I might just step away from this account, pass phase two, though, discretionary or mechanical, and then, you know, get a payout, play it safe, and that's it. You know, I'm going to go continue to work on my discretionary skills, try to get better, probably on demo if I'm being real. Probably just leaving phase two here alone, probably working on my skills a little bit more, reviewing more, analyzing more, probably demo trading a little bit more, or using another account but low size, not risking it this much. But then my ego is like, yo, you already know what you're doing. Just review, constantly get better, tape read more, analyze more, annotate more, and take the trades. You don't need to be doing this and that anymore. You don't need to be holding yourself back. But then the other side of me is like, yo, play it safe, do this, do that, you know what I'm saying? But like, it's like I'm battling myself, you know. So I find I have to meditate and really like journal this experience. So yeah, peace.